Welcome back to Today Assets Report, the channel where we break down the biggest moves in crypto, finance, and everything in between. And today, I am telling you right now, you do not want to scroll past this one. What just dropped is the kind of news that stops you mid-scroll and makes you sit straight up in your chair, because this is not hype, this is not speculation. This is Brad Garlinghouse, the CEO of Ripple, sitting down with Maria Bartiromo in a fresh interview. And what came out of that conversation is something every single XRP holder, every crypto investor, and honestly, every person paying attention to the future of finance needs to hear right now. We are going to walk through the whole thing together step by step, and wherever I feel like something needs a little more context, I am going to fill you in, because there is a massive amount packed into this interview, and I want to make sure none of it flies over your head. So, if you are ready, let us get into it. And if this kind of content helps you stay sharp and ahead of the curve, go ahead and smash that like button right now. You guys genuinely keep this channel going, and I appreciate every single one of you. So let us start at the beginning, because Maria asked Brad exactly the question everyone has been thinking about, which is, how has all this volatility in the markets, both in crypto and beyond, actually affected Ripple's business? And Brad did not sugarcoat it. He acknowledged that the crypto markets had some real headwinds coming out of last year, and that things started 2025 in a pretty flat, uncertain place. A lot of eyes, he said, are on what U.S. regulation is going to look like and whether Washington is actually going to get it done. But here is where it gets really interesting. Despite all of that noise in the broader market, Brad said Ripple has been on an absolute tear internally. The business has been growing fast, and that growth is being driven not just by XRP, the asset, but by the entire ecosystem of services and technology that Ripple has been quietly building and acquiring. And when he starts breaking down what those acquisitions actually look like, that is where this interview really starts to heat up, so stay with me here, because this is where the real substance begins. Brad talked about two major acquisitions that Ripple made, both valued at over $1 billion each, and both of them have already outperformed internal expectations, which is not something you hear every day after an acquisition. The first is a company now operating under the name Ripple Treasury, which was formerly known as G Treasury. Think of this as a premium financial dashboard built specifically for CFOs and corporate treasurers. It gives them the ability to see and manage liquidity across the globe in real time. Now, here is the number that should make your jaw drop. Last year, that platform orchestrated $13 trillion in payments. $13 trillion. And here is the kicker. Not a single dollar of that moved through a stable coin or any crypto rail. 0%. That is not a failure. That is an opportunity. That is the gap that Ripple is positioning itself to fill. Imagine even a small slice of that $13 trillion starting to flow through the XRP Ledger. The math alone should tell you why Brad said they are heading into a record quarter to close out Q1. Then there is the second acquisition, which was a company called Hidden Road, now rebranded as Ripple Prime. This was the largest non-bank prime brokerage business in existence, and since Ripple announced the acquisition, its revenue run rate has already tripled. Let that sink in for a second. They have not even finished fully integrating it, and the revenue has already tripled. Brad credited this partly to the fact that Ripple brings a much larger balance sheet to the table. Financial institutions that previously would not touch Hidden Road as a smaller independent counterparty are now comfortable doing serious business with Ripple Prime because the backing is there. This is exactly how scale works in finance. When you have the weight and credibility of a major player behind you, doors that were previously closed start swinging wide open, and Ripple is walking straight through them. Now let me give you the full picture on the numbers, because this is where things get almost hard to believe. Ripple Prime is processing roughly $3 trillion annually, and the plan is to route that through the XRP Ledger over time. Ripple Treasury, as I mentioned, is handling around $12.5 trillion. Add those together and you are looking at somewhere in the neighborhood of $15 to $16 trillion in annual volume that could eventually touch the XRP Ledger in some capacity, whether through RLSD, their stablecoin, or XRP itself acting as a bridge asset for cross-border transfers. To put that in daily terms, those two businesses alone could represent something like $40 billion moving through every single day. $40 billion a day. For context, Ripple literally just recently crossed the $100 billion milestone in total payments processed. The scale of what is sitting right in front of them is almost incomprehensible compared to where they were even a couple of years ago. and we have not even gotten to the regulatory side of this story yet. Brad brought up something that I think a lot of people outside of crypto may not fully appreciate, and that is just how much the regulatory landscape has changed in a very short period of time. He talked about the SEC and CFTC making a joint announcement just days before this interview, and in that announcement, they identified 16 digital assets that they can now concretely classify as commodity digital assets. That is a monumental shift. For years, the regulatory environment was one of the biggest weights holding this industry down. Instead of creating clear rules, agencies were just filing lawsuits. Brad called it lawfare, and honestly, that word fits perfectly. It was not thoughtful policymaking. It was an attack campaign designed to drive companies offshore and scare institutional money away from the space. And now we are watching a complete 180 happen in real time, which brings us to one of the most personal and significant parts of this entire conversation. You have to understand what Ripple went through to get here. Back in December 2020, the SEC dropped a lawsuit on Ripple that consumed nearly 5 years of the company's energy, resources, and focus. The core of that fight was whether XRP should be classified as a security or a commodity. Ripple refused to accept the security label. They went to war over it. They fought it all the way through the courts and they won. And now, barely a year removed from that whole saga wrapping up, the very framework they fought for is being put into place by the regulators themselves. The CFTC and SEC are essentially validating everything Ripple argued in court. If you wrote this as a movie script, people would call it too on the nose. The hero goes through the worst of it, almost loses everything, and then right at the finish line, everything they fought for becomes official policy. That is the arc Ripple has been living through. And right now, they are very much in the triumphant chapter. But Brad was careful not to get too comfortable, and that is actually one of the things I respect most about how he communicates. He was very clear that all of this regulatory progress, as massive as it is, still rests on a shaky foundation until it gets codified into actual law through Congress. And that brings us to two pieces of legislation that are absolutely critical for this industry going forward. The first is the Genius Act, which covers stablecoin regulation, and the second is the Clarity Act, which addresses the broader question of digital asset classification. Brad said he predicted on a previous appearance on Maria's show that the Clarity Act would be signed into law by the end of April. He walked that back slightly in this interview and extended his target to the end of May, but his overall tone was still optimistic. He mentioned attending a dinner in Washington just 2 days before the interview where he sat next to people who really understand how legislation gets made, and they gave him real reason to believe the Clarity Act is going to get done. The reason why the Clarity Act matters so much goes beyond just Ripple. This is about the entire U.S. financial industry and whether it is going to be a global leader in crypto and blockchain infrastructure, or whether it is going to keep pushing talent, capital, and innovation offshore. Without that law in place, a new administration 4 years from now could walk in and undo a significant portion of what has been built. And for an industry that is right at the tipping point of converting pilot projects into actual functioning infrastructure, that kind of reversal would be devastating. The Clarity Act creates permanence. It tells banks, it tells corporations, it tells institutional investors that this is not a policy flavor of the month. This is the law of the land, and you can build your business around it with confidence. That is the unlock that Brad is waiting for, and honestly, that is the unlock the entire industry is waiting for. Speaking of banks, Brad had a really interesting point about what happens to those big financial institutions once the Clarity Act actually passes. He said it would not necessarily transform Ripple's own business overnight, because Ripple already has the legal clarity it needs. What it will do is finally free up the banks. Right now, a lot of major U.S. financial institutions understand that Ripple won the lawsuit and that XRP has been ruled not to be a security. They know that. But they are still hesitant because they are thinking about the what-ifs. What if a future regulator reverses course? What if we lean in heavily and then have to unwind everything at enormous cost? Once that fear is removed by actual legislation, Brad believes you are going to see the biggest names in American finance leaning into this space in a way we have not seen yet. The JP Morgans of the world are already getting more exploratory, but the real flood of institutional participation is waiting on that legal foundation. Now let us talk about something that has been catching a lot of attention in the community, and that is the relationship between Brad Garlinghouse and Larry Fink at BlackRock. These two have been showing up in the same circles quite a bit. They shared a stage at Davos. They are both connected to overlapping networks of technology partners who are building ways to put financial products onto the XRP ledger. And the question everyone is asking is simple. When does BlackRock file for a spot XRP ETF? Brad did not give a direct answer on that, and honestly, he probably could not if he wanted to. But what he did make clear is that BlackRock moves when client demand becomes impossible to ignore. That is what triggered their Bitcoin product. That is what drove their Ethereum filing. Without a groundswell of institutional and retail clients ringing their phones and flooding their inboxes with requests, nothing happens. The optimists in this community believe that pressure could build to a tipping point before the year is out, and a BlackRock XRP ETF would be a generational moment for this asset. Brad also spent some time talking about the use cases for XRP itself because not everyone watching Maria's show is deep in the crypto world, and I think his explanation is worth repeating here. XRP, much like Bitcoin, is an open-source digital asset running on a blockchain called the XRP Ledger. Ripple is one of the primary participants in that ecosystem and uses XRP primarily for payments. But the reason developers and entrepreneurs keep gravitating toward the XRP ledger is that it is extraordinarily fast, has extremely low transaction costs, and is energy efficient compared to other major blockchains. That combination makes it ideal for settlement, for tokenizing real-world assets, and for building cross-border payment infrastructure. They are working with Guggenheim on tokenizing money market funds. The Land Authority in Dubai is running land registry processes on the XRP ledger. These are not speculative future use cases. These are live, real-world applications happening right now. On the topic of stablecoins, Brad made a point that I think perfectly captures why this moment in crypto history is so different from everything that came before it. He mentioned that last year alone, there were $33 trillion in stablecoin trades globally. A Citibank analyst apparently called stablecoins the ChatGPT moment for crypto, meaning this is the point where the general public and the corporate world start to actually get it. They see stablecoins not just as a crypto curiosity, but as a legitimate on-ramp to broader blockchain-based financial solutions. And the example he used to illustrate the old way of doing things was absolutely perfect. PayPal and Venmo, two apps owned by the same company, could not directly move money between each other for 13 years. 13 years. You had to go through a bank to get from one to the other. The fact that that barrier just now came down is a reflection of how broken the old rails really are, and why the new infrastructure that Ripple and others are building is not just nice to have, it is necessary. Looking ahead at what 2026 actually means for Ripple, Brad was direct about the focus. After a year of aggressive acquisition and a 50% increase in headcount, the priority right now is integration and execution. It is not about chasing the next big deal. It is about making absolutely sure that Ripple Prime and Ripple Treasury are operating at the level they are capable of and that the synergies between them are actually being captured. He talked about the fact that larger financial institutions that would not previously engage with Hidden Road are now calling Ripple Prime because the backing gives them confidence. That shift in counterparty trust is driving revenue growth that was not in the original forecast, and it is happening faster than expected. When you combine that with the corporate demand for treasury services growing at a rate Brad described as incredible, you understand why he had zero hesitation saying that 2026 is going to be a record year for Ripple. And here is the part that I want to leave you with because I think this is the piece that ties everything together. What Ripple is doing right now is positioning. It is not just winning individual deals or closing individual partnerships. It is building a comprehensive platform that connects traditional finance to decentralized finance in a way that is practical, scalable, and regulatory compliant. The acquisitions, the regulatory wins, the legislative progress, the institutional relationships, every single piece of this is part of the same strategy. When their sales team walks into a room with a major bank or a Fortune 500 company today, they can have a completely different conversation than they could have a year ago. They can say, we handle your cross-border payments, we manage your treasury needs, we offer prime brokerage, and all of it can eventually run on infrastructure that is faster and cheaper than anything you are using today. That is a genuinely powerful pitch. And if the Clarity Act lands before summer, that pitch gets even more powerful. Stay locked into Today Assets Report because we will be right here covering every single development as it happens. See you on the next one.